personality in direct tax arena, in litigation and consultation. He's known for his expertise, and he's here in this industry and our professional practice since last 4 decades, 3 decades. So that experience he's going to share with us, and he's going to deliberate his knowledge on profit and gains of business or profession, PGBP, key issues for non-corporate assessees, including taxation of firms. One important point about him I would like to narrate here. Last year when I was a direct tax committee chairman, we started one help desk activity. We have spoken about it. And the one backbone of that activity is Mehta sir. Every alternate week he used to attend it virtually, and is sharing his views on those aspects. Also, we are waiting for our Arpit Kabra, Central Council member. So friends, I'll talk about the help desk. Normally we are taking or accepting your queries on Google form, and you can attend those sessions from anywhere at your convenience, from your office or even from car. Sir, I remember you addressed some queries from your car also. So that flexibility is there, and any person from the across the India, pan India, they are posting their queries, and we are trying to give them solution, and it gives us immense pleasure and satisfaction that whatever best way we are trying to help our members, it is reaching out to the members. And this year, sir, in last session we had around 22 questions. I think the quantum of questions will increase gradually because awareness should be there. So on an average, we are expecting around 35 to 40 questions, and we all request you to come forward and post your queries, and it will be helpful to other members also who are attending, because the question you are asking may be applicable to them also. So it is good learning opportunity for all of us. So meantime, I'll introduce the faculty team. Meantime, I'll request Madhuri ma'am to introduce today's faculty, and once our CCM comes, we'll again allow him to speak.
Thank you, WRC and Sanjay sir, for giving me this opportunity. Um, so today's second speaker, Ashok Mehta sir, is a fellow member of the Institute of Chartered Accountant of India and a partner at a DR Mehta and Associate. He has over 30 years of experience in audit, tax litigation, international taxations, and FEMA matters. He has led the statutory and internal audits for several public and private sector companies, and is widely recognized for his expertise in a direct tax advisory and compliances. He has served in a various leadership roles at a Chamber of Tax Consultant, including a chairman of a direct tax committee and currently a chairman of a research and publication committee. He is a regular speaker, author, and academic contributor. He has delivered sessions at a professional forum such as a WRC and a CTC, and also served as a visiting faculty at a Mumbai University. With this, I request CCM Arpit Kabra sir to join the stage. And I request Arpit Kabra sir and Sanjay Nikam sir to felicitate our speaker. Yes. So now I request our Central Council member Arpit Kabra sir to guide our member.
Good morning, everyone. It's an absolute delight to be in front of you today. And as a Central Council member, I don't know how many of you we've been able to get in touch, but this year has been very exciting. This year has been very, very, exciting, challenging, I would say. Of course, the new Income Tax Act that we all are here to discuss, but there are some multiple stuff. I don't know if you've seen the networking guidelines. I don't know if you've seen the PMO is like gung-ho about, creating something extraordinary about our Indian CA firms. And so the aggregation, multidisciplinary, all of that is making a huge buzzway. One another buzzway will be private equity in CA firms. And very soon there will be something around that as well. So what I'm trying to do is, as a council member, just taken some flat 7-8 minutes. Ashok sir, if you permit, thank you very much. It's a pleasure to see you after a long time, sir. And thanks. Income Tax Act as a revise hota rahe, to we can see more of you frequently. But yeah, it's good for us also. More the litigation, more the complications, and more is our demand. So that's a good thing to do. And of course, GST जैसी complex चीज़ को अगर हम लोग कर सकते हैं तो फिर बाकी सब तो it should be a cakewalk. I've got a small video for you, and then I'll request Mishra ji to please play the AV.
The world is evolving. Technology is
Lights.
rapidly advancing. Businesses today are increasingly revolving around tech platforms. With this shift, the government is exploring possibilities to control cyber issues through regulations and frameworks. And the profession is evolving with it. ICAI is at the forefront not only in India, but also on the global stage, having pioneered the world's first forensic accounting and investigation standards, along with the world's first information systems audit standards. Because the future of finance is digital, investigative, and tech-driven.
To explore new horizons and analyze evolving government and regulatory expectations, DXFS serves as the center stage. DXFS 2025 showcased participation from 1,500 plus professionals, regulators, industry leaders, and left a powerful impact. Again, it's not just to attend, but to experience the future of the profession. DXFS 2026, where ideas will be exchanged, opportunities will be explored, and expectations will be achieved in information systems audit, forensic, and investigation engagements, data privacy resulting in digital trust with digital assurance.
Join us at DXFS 2026 for exploring opportunities not only in India, but internationally. Sharpening the skills for tomorrow. On 22nd and 23rd May at Novotel, Hyderabad.
From forensic accounting to digital assurance, from systems audit to cyber security, from regulatory expectations to real-world insights. Everything you need to stay relevant and ahead.
And here's the reality. 2,000 plus professionals are expected to be there. The only question is, will you be one of them? Those who act early will lead. Those who wait, follow. Don't miss the platform that can redefine your next 5 years. Register now.
All right, thank you. Friends, as a Central Council member, we've got multiple portfolios. So I head the ICI Placement Directorate. So there's a huge usher, if you'll see, there are a lot of placement opportunities that have opened up for chartered accountants, and there's a huge demand. Huge means if 7,000 people qualified this year, out of which 5,500 people joined us for campus, we've got 9,000 plus vacancies, and they are not yet fulfilled. So now we are going to a smaller center. So earlier we used to go for 10 centers, and let me tell you, friends, not only the world's largest accounting body, today we are single profession, world's largest campus placement body also. No one comes even close to us. Let's have a round of applause for the ICI. I don't know if you appreciate that or not. IIT Bombay, so you forget about IIMs. IIMs so have hardly 1,000, 2,000 people. IIT does maybe around 5,000 people, not even 5,000, single profession. So there are multiple professions, and so it's spread out. But we are the only ones who are doing it for almost like 9,000 vacancies now, and 10 locations in the first round. Since there is so much of surplus, there are 2,100 plus more vacancies, so we've gone to smaller centers. Smaller centers means Lucknow, Pune, and Ujjain, Indore, Bhopal, Ratlam, all of these kind of areas. And after that also we are anticipating now that we will have one more round of virtual hiring drives, wherein we would now invite people who would want to still they have vacancies. So ICICI, for example, has come to us to hire 270 people in Ernakulam, and they want only chartered accountants. So they are setting up a new base in Ernakulam, and anyone. So there is one GCC which has come out of Coimbatore. They need 230 people. So what I'm trying to tell you is, people are now looking for chartered accountants for beyond just FP&A roles. That is one. Of course, I am heading the career counseling also, which is additional part. Then digital accounting assurance board is something that I'm very passionate about. Forensics is something, but cyber security. How many of you have done FFD? Okay, very few. Okay, how many of you have done DISA? That's a nice number. So we've, FFD is gonna soon become a diploma course now. So much is the demand that SEBI itself is leading this race. So 3 new things have happened, and therefore I thought, I'll just speak to you about, while you're discussing income tax, maybe this would be of prime importance to you. There's a prediction done by the Nagaraju sir. He's the finance secretary today. He mentioned that probably in 5 years, 6 years down the line, we'll not find a good auditor. Good means we'll not even find auditors in this country, because it's becoming a very, very tense exercise. It's a very intense exercise. So most of you DISA people, actually you are capable of. So SEBI came out and said that, why don't we find someone, a chartered accountant who can do systems audit? We need system audit. We don't need engineers to do system audits. There is something called as certain empanelment. Certain is the cyber emergency response team of India. Unfortunately, chartered accountants do not qualify in that. Although we've got 38,000 plus DISA professionals, still our capability is not set that we could become the cyber emergency response team. And whenever it comes to training any of these, so you talk about ATS, you talk about NIA, you talk about NCB, you talk about all of these agencies where money is involved, they are absolutely gung-ho about getting a chartered accountant for the training program. That means they actually want chartered accountants to work in their entire ecosystem as well. Of course, there are logistic issues that are happening, but apart from that, have we arisen to that fact? So today, as we see, SEBI has come out that we need someone who a chartered accountant who can become a system auditor. Second, why can't a chartered accountant automatically become a merchant banker, category 4? Why do we have to actually go to another merchant banker? A CA himself with the due diligence expertise, with the forensic, with the valuation, with all of these games, why can't he become a merchant banker himself? That is one very big discussion that is going on. Apart from that, cyber security has become something like a rage today. Of course, we are in Bombay, so we don't understand this. But recently there's a big, debate happening on anthropic models adopting malware or firmware. If you have heard about, they are all thing of the past. It's everything now about something which can just come as a part of AI function to all of us. Till now AI is free, but the kind of money that is being burned, very soon it is gonna become expensive. I'm sure you must have heard it. So abhi chaska laga diya aapko. So it's just like that Cadbury silk, with the entire cosmetic display of what the silk is, what a chocolate is, and then now they are offering ki free mein le lo. Ab now you have to pay almost double, triple. So it's just like that exotic commodity AI that has been given to you. Now people have used it to make a lot of graphics, interesting flyers and all of this, but very soon it will become a very premium affair, and that is where we'll always struggle. I mean, we don't, because we are okay, we have so many compliances to take care of. We hardly have time. Deadlines is what we actually love working with. So, but yes, overall, there'll be a huge shift. So therefore, as the Digital Accounting Assurance Board, I invite you. We are doing a big conference on DXFS. This is annual conference that we do. And whether you are not there in DXFS, that's not a point. What my point is, that awareness, that that excitement about adopting digital assurance. I don't know how many of you have actually come across, but behavioral financing has already started. Now there is behavioral assurance function that has to be geared up with. SBI is leading this entire race. NBFCs are leading this entire race, wherein none of you are required to give your ITR or your bank statements or anything. Your behavioral, if that, and a chartered accountant is actually who is making a valuation report after of a behavior dashboard. Out of that, they are actually able to get funds. Very recently, even MSMEs have been rolling out. Some guidelines have come from the MSME committee, from the MSME ministry, that start rolling out funds, give borrowings based on their behavior, based on their performances, rather than based on these financial attributes. Now that's going to be a drastic shift. So one, of course, the valuation that we can only do, no one else can do. And the second is, can we do a behavioral assurance? Now that is where the entire digital aspects come into picture. So that's what about it is. And there's one other committee that I'm part of, is Public Finance Government Accounting. If any of you who come from, I remember Atulji, he comes from Satara. There's some people who are from outside, or they have roots outside. There is an important function. Almost 30,000 crores are blocked in budgets. Since these municipal bodies do not have budgets, since they don't have any accounting framework, they are unable to utilize those resources well. And our, there's with CNAG, we have come out with a beautiful program on how can one chartered accountant, well, there should be a chartered accountant in every municipal body, in every government local body, in every maybe a panchayat body or a taluka body. So if any of you are interested, please, reach out to us. We'll be more than happy to maybe, gear you up, to maybe armor you up so that, maybe, I don't know if Bombay suits, of course it suits, but, if it's somewhere you believe that you want to go back to your roots and you want to go back to your hometowns or something, and also there are some people who want to really remain in those places and work with the municipal bodies and all of this. Minimum, you can, the revenues are extremely massive. Imagine 30,000 crores unlocking. Uska aap 1% bhi dekh lo, and distributed amongst maybe say around 186 branches hai, usme se ek CA bhi agar aata hai. So each of them is getting more than 2 crores per annum. So point is, let us start thinking about these aspects as well. A chartered accountant is now relevant in every space, including the space. So, while you will be discussing a lot of stuff today, just keep one thing in mind that, audits are now gonna become very, very much digital. With DPDP Act, I don't know how many of you face challenges that, people are now under the garb of DPDP saying that we cannot share this data with you. तो फिर कैसे documentation करोगे? फिर कैसे आप materiality test check किए वो सब कैसे, so audits are therefore gonna become very challenging. DPDP Act is gonna, so something on DPDP, there are two new standards that have been promulgated and announced by ICI, which I think the world is now taking a note of, is Forensic Accounting Investigation Standards and Information System Audit Standards. Nobody in the world has come close to even defining these. We have actually made standards out of these. They are being test checked. Almost 18 countries are now evaluating that in their framework. So that's what is happening across the globe, across the country. As I said, huge opportunities from outside. So work from Philippines, Vietnam, Pakistan are flowing into India. Unfortunately, Bombay has not been able to grab those assignments because of whatever talent or whatever space crunch or lack of awareness. But yes, tier 3, tier 4 cities, they're grooming up very well. So it's time that, aggregate. It's time that you understand, you network well. I don't know, you are maybe 200, 300 people here today, but I don't know, have you even, met with maybe more than 20, 30 people, those who are not known to you. I think if that's the case, identify what is the shortcomings, what is the weakness, probably leverage on that this is not my area, this is your forte. Probably can we start working in association. Ethical guidelines are opened up, advertisement guidelines have opened up, aggregation is now gearing up very fast, networking guidelines have come, international guidelines have come. So I am hoping that, if you're keen, please try and adopt it. It's just a matter about awareness. And programs like these, events like these will give you a super awareness. So invite all of you to be part of this extravaganza at Hyderabad. It's the largest venue, 2,000 people, no hotel that we got. And you see Ministry of Electronics is coming, SEBI is there, ACFE is there. How many of you are CFEs? Anyone? Certified Forensic one? Very good. Pursuing? Okay. You need any help in exam clearing? Ask me. I'm from exam committee also. Not here. I'm from ICI, but I've passed that, so I know there are some very good cheat codes available. You can pass it very well. So it's all about strategy, friends. I think after being in this council, one thing is for sure. आज दैनिक भास्कर में they've actually carried out my interview. एक छोटा सा podcast भी चल रहा है मेरा रिचा अनिरुद्ध के साथ. तो there we've just cracked open the it's about strategy and discipline. There is nothing extraordinary about passing a chartered accountancy exam. Having said that, we've passed it. If they ask to appear again, we won't. But yeah, it's good to be on the other side. But anyways, thanks a lot, friends. Have a great learning session. For any doubts, feel free to reach out to any of us. More than happy to connect. These are 5 committees that I'm work. But anything else that seems... Sir, if that's the question, sir, I think I'm failing in my duty as a Central Council member. If a chartered accountant feels how to reach out to me. Sir, you have to just do Google Arpit Kabra. The first hit would be me. I challenge. I mean, if anyone else comes in, tell me. We are so super search optimized. So, sir, I'm Arpit Kabra, just for all of your, and I'm my LinkedIn. So, all of these lift handles, we say, lift kara de. So, you reach out, and if it is really a good conversation, we'll love to have it. So, but, usually people will have some very different kind of queries. And if that is something that I have to keep it within the limitations of my being a council member, probably I will not be able to have those conversations. But yes, if anything that you feel is, you want to have any assistance or awareness, or more than happy, sir. More than happy. Yeah. So because I'm part of career counseling, sir, career counseling we have now opened up. Earlier we had 20 people only doing career. Now career counseling is you go to a college, tell them, you get 9,000 per hour. The kind of remuneration, I don't know if you've heard, if you've seen this or not, in ICI, how many of you done AI level 1? बस इतने से ही फिर इनकम टैक्स में क्या करने वाले हो आप लोग अभी I mean these acts तो will keep on changing, everything will keep on changing until unless you are hands-on on your softwares or your technology. So I don't know if you are using Computex, if you're using SAG Infotech or any of these. I'm challenging you, not 10, more than 10 of you are using more than 20% of the software capabilities. Which is right. But you tell us, no, आपको कब लेना? You tell us, we'll get it done. Sir, नहीं क्या issue हो रहा है? I'll tell you. When they announce, no, so it's filled up. But suppose you are here, 30 of you decide कि हमको करना है. You write to us, immediately we'll do it. So 30 के लिए we'll get it done. And I'm telling you why. I'm telling you why. See, I'm telling you why. You know how much is an faculty in AI and ICI earning? Of almost 50 to 60 lakhs per annum. Because that's the demand. That's the huge demand that we're having. So people who have done level 1, why I asked level 1 was, if you've done level 1, please up your game, come join us as a faculty. I mean, I don't know, I don't want to say that, compared to your practice or whatever, but I'm telling you, ICI is remunerating, we are hiring freshers at 15 lakhs today, ICI. 7th pay commission lag raha hai hamare idhar, ICI mein. I'm not saying be a job seeker, but what I'm trying to tell you is be an entrepreneur. Become a faculty also. While you're doing what you're doing, take out some time, and if you can, try and work on these. DAB faculties, FFD, these are all people, 6,000 per hour. Tell me, there's nowhere you'll find it. Anyways, I don't want to take more time, because we've got excellent faculty, and Sanjay Bhai is here. I think, he's one again. So these regional council members are gung-ho. They're very excited about, all of these things that are happening. The more you ask, the more they will actually introspect and give the best to you. See, our role is aggregators. Everything that is happening in the ICI is a massive body. And I don't know if you'll appreciate this or not. हर organization में कहीं ना कहीं आपको कुछ ना कुछ समझ में आ रहा है कि यहाँ पर उठक पटक हो रही है, इधर हो रही है. ICI 186 branches across the country, 5 regional office, 150 buildings, 3,000 plus staff. कहीं छू तक खबर नहीं है. Pure administration. बाकी जितनी भी councils हैं, engineering council खत्म, medical council खत्म, architectural council corrupt है, पूरा का पूरा it's struggling. आपका ICSI and CMA, where they are. CMA तो बेचारे, they are not able to conduct their exams also now. So point is, look at us, 75 years old, and we are still growing. Hardly you'll find any organizations without the support of government who have grown. We have grown. That is yours and mine capabilities as a chartered accountant. We have able to do this. I don't know if you've appreciated this or not, but as a youngster, let's have a round of applause, boss. It's not a joke. In this country where, politicians can do anything and everything. Anything and everything. We've survived 75 years and we are like what? 5,000 crore hard cash. FDs, yes? Only for your and me purpose. Look at the CABF, it is growing. The president this time, the president comes from a small place, Visakhapatnam. He's walked 14 kilometers for his schooling. A person like him is becoming the president of ICI. We are absolutely purely a democratic body and purely work committed body. So there are people who think about, ICI is not doing something for members, just students or something. Tell me, independent board hai, 32 of us elected, 8 of them representing government. How is it that we can frame anything which is not in favor of any stakeholder? Bombay छोड़ो, smallest of the places है, Akola, Amravati, Washim, वहाँ के लोगों के लिए भी हमको we'll have to think about, because there is some representative there, or maybe the government is there, who's getting a feedback from everywhere. So I'm trying to say that it's time that most of us understand what is this ICI, what are we part of, and what is the ICI actually has to give to all of us. You've not encashed ICI fully. It's your mother. Mother's Day is coming tomorrow. It's time you wish Mother's Day to your ICI. Take the best out of it, and all the best. Have a good learning. Always around. Feel free to reach out to me should you need any more clarification or any more assistance. Thank you. Thank you very much.
Wonderful, wonderful delivery, sir. I seen you working as a chairman of a WIRC. I work under though you are younger to me, but we learned many things from you. And let me tell you, he was the chairman. Then we won the Guinness World Record for Vikasa also. Big round of applause to the young, dynamic, vibrant, and always innovative Central Council member. I think it's his second year in the council as a Central Council member, but you can judge him. The experience and contribution is making to our profession. Sir, you enlighten us about the activities, very few activities of the institute. I would say 1% only you could elaborate here, but those are very vital, very important, and very closely connected to us. Also, you shared some secrets here. Those to share those secrets, one should have the guts, and that guts you have, and that confidence is already shared with you, with the members, and that confidence will definitely help us. Thank you very much for your gracious presence and the time you consumed. Actually, you invested here for the members, and members are benefited with it. Now, I'll request all of you to welcome our today's dignitary, our showman today, Ashok Mehta, sir. With big round of applause, please welcome him.
Good afternoon, everyone. Yeah. You must have already gone through yesterday all these things. The fastest brought amendment by the government. The select committee of the parliament also completed it. The suggestions in record time. The amendments were brought and the law was put into place within a year's time. The intention is simplification. How simplified it is, we'll take it up over the next few, say 1 hour plus minutes. So there is a reduction in the number of sections. What had happened was from 1961, we had kept on adding sections. This amendment, that amendment, we never removed anything. So this time they removed all the non-effective sections, removed all the provisions and put them into number form and put the sections. They've reduced 35% of the sections. There's an increase in schedule to the extent of 20%, 35% reduction in rule, and around 52% reduction in the forms. They've done an excellent job with regard to this particular FAQs of interplay and transition. Much of my presentation or charts is from this. This is a 99-page document which everyone should keep in handy, because this gives you answers to all transition questions which you have. All transition questions are covered. They've done a fantastic job with regard to this particular document. However, they put a disclaimer in the center of the page saying that this is only our view. If it's a legal, don't use it for legal view. If you hold it against us, we will do what is beneficial for us. So this particular applicability, applicability of the provision, from midnight of 1st April 2026, the new act comes into picture. It does not disturb the old act. The old act will continue with the provisions up to 31st March 26. And if I want to, there's an assessment order in 23-24 which I've received in March, and I want to file an appeal, it will be under the 1961 Act. All actions with regard to the old act will continue in the old act. The new act will apply only from tax year 2026-27. If I want to file a revised return, supposing assessment year 26-27, you want to file a return up to 31st July, you file the normal return under 139(1). After that, before 31st March, you will file under the belated return. After that also, you want to file a return as an updated return. It will be all in the 1961 Act, because it is up to 31st March 2026. Can I file an updated return for 26-27 or earlier years? Yes, it will be all in the old provisions, and the old provision, the old act and the rules will continue. So this is the simplification they brought. The 1961 Act will continue till it is brought to the logical end, and all matters of 1961 Act get settled up to Supreme Court. Everything under the 1961 Act will continue. Everything of the new Act will also continue, and your income tax filing portal will hold good for both the things. How good it will hold, we all are aware. We've done GST, so we are superhumans to face this. So the government has good faith in us that we will be able to deliver on this difficult task also. As I said, the last case of Supreme Court. Supreme Court today is hearing 85, 86 cases. So repeal and savings section 536 has been brought in. So you have section 6 of the General Clauses Act, which deals with repeal of laws. It tells you that anything done under the repealed law will continue with the new law as done in the new law. Now there was, when they shifted from 1922 to 1961, there was one section 279 which was similar to 536. It was the transition section. However, in that transition section, there was no guidance as to whether prosecution will continue or not. Whether how do you continue prosecution? So there was a prosecution of this particular T.S. Balaya in the 1922 Act. And then the question arose whether that prosecution can continue in the 1961 Act, because 1922 Act has repealed and therefore no prosecution can be carried out. The Supreme Court said nothing doing. Section 6 of the General Clauses Act says that everything done in the old Act will continue, and therefore Section 6 would apply, of General Clauses Act would apply. Now they've brought in 536 section, which tells you that they've tried to cover everything. So whatever is the transaction, no privileges. So if you have a 12-way ATG registration in the old Act just received in March, will it continue for 10 years? Yes. If I have invested in capital gain scheme, FDs in the old Act, will it continue? The answer is yes. So everything, all rights, privileges, actions taken under the old Act will continue. If there's a recovery proceedings under the 1961 Act, will it continue in 2025? Yes. Okay. So then they take a precaution. They give you 536(4) that we have written everything, but subject to that also we've missed out something. Section 6 will still apply. Okay, 536(4). Okay, so they are very cautious about this. So what has changed? The major changes shift from previous year assessment year to tax year. Okay, so now life is easier that way. Interest on refunds. So if you have interest which is to be paid up to 31st March under the old Act, after 31st March under the new Act. If you have recovery proceedings up to 1961, they'll be under the old Act, after 1st April under the new Act. So therefore, earlier there were, if you look at the old Act which was brought before the PCS changed it, Parliament Standing Committee, was that they had referred to 1961 and 1922 Act in a lot of places. They removed everything and they brought in the 536 section, which is a central section to cover everything. Again, the rules, there is, under the rules, it is different. The rules are received their power from the Income Tax Act. So 1961 Act, the rules of Income Tax Rule of 1962 will apply. For 2025 Income Tax Act, Income Tax Rules of 2026 will apply. So individually rules are separate. Both the rules will simultaneously work, and the income tax site, because everything is digital, income tax site is expected to service both the things. What is the change in computation? Now we come to the main this thing. First, we start with presumptive taxation. So presumptive taxation, you have 44AD, you have 44ADA, you have 44AE, where 44AD is for businesses, 44ADA is for professions, and 44AE is for tanker lorries. Now, these sections have been clubbed into section 58. To reduce the sections, they put a tabular form and they put definitions in separate sections. Similarly, for 61 is for non-residents. With regard to the old section 44B, with regard to cruise ship, mineral oil, all those sections have been put under 61. Okay, so there is a tabular format. They've changed, clubbed all the sections, put them into one, and in the tabular format they are doing it. The 6%, 8%, 50% is the rate of profits which you are supposed to do on a presumptive basis and pay tax accordingly. What is changed? So what used to happen in presumptive taxation under 44AD was that there was no restriction. 44AD subsection 2 said that if you have any expense, it will be deemed to have been done. If you have other businesses where you have losses, that losses could be set off. You have carry forward loss of business, you could set it off. So all that was allowed under 44AD4. So I've given an example. I have one business where I have 9 lakh profit. I have another business where there is 5 lakh profit. Net it off, 4 lakhs was to be paid. Tax was to be paid on that. Now what is changed? They say that now we do not like this. You are misusing 44AD, and therefore we will change any loss, allowance or deduction allowable under the provisions of this act will not be allowed. So what they are saying is, if you are going under 44AD, 6% or 8%, on that pay the tax, do not take any deductions or allowances. So the new law does not allow you any deductions or allowances and requires you to pay that taxation. Okay. The logic which the finance minister gives is that presumptive taxation itself confers substantial relief, and that actual tax rate is 2.4 or 1.8%, and therefore we do not intend to give any other benefits. Losses will be carried forward. You will not be allowed to set it off. The loss carry forward provisions would remain. The question will arise as, supposing I have income from house property loss, do I set it upon 44AD? The answer seems to be no as of now. Unless this particular law gets implemented, you don't know. But as of now, the answer seems to be I will not get loss of house property also against my 44AD profits. No, that's why they say allowances. If you are in the old system to claim Chapter 6A deduction, that also will be disallowed. So this is an example. So I have 75 lakh rupees of professional income, and I show 50% profitability. 37.5 lakhs is my profit. Because of the war, I lose 20 lakh rupees in the future and the options. I set it, as of now, I could set it off and I pay tax only on 17.5 lakhs, and the tax on that would be 1.5 lakhs, an odd amount. If after March 27, I will not be allowed to set off the future option losses, I will have to pay tax on the 37.5 lakh rupees, and there will be no deductions or allowances allowed. The carry forward of losses could be claimed in the following year, but not here. Yeah, going ahead. This is the normal business or profession, the classification dispute. This is not something which is to be done with the new law. This is something which I just wanted to bring to your notice. Today you have certain TDS being deducted under 194G, though it is under 194C by overzealous account staff of the companies. And therefore what happens is, even though you are not a professional, your TDS is deducted under 194J. And CPC blood flags it, saying that you are not shown 44ADA for 50%. Now this is a basic problem which continues even today in the new law under 62(4). The definition of specified profession is given under section 44AA, the new section 62. That continues. So this is the definition of profession under 62(4). The circulars are there. So if I am an MBA providing consultation services, do I go under profession? The answer is no, you go under 44AD. If I am an engineer who's doing designing, do I get into any of these professions? If 10% is deducted, am I supposed to? The answer is no. Then there is this controversy about film artists. So film artists are professionals as per the notification of 1977. However, it talks about film artists. What about the TV artist, or what about the OTT professionals? Are they film artists? That dispute continues. To be on the safe side, today we are showing it at 50% because there is no actual expenditure also of those guys. However, if you ask me, there is a view that 44AD would apply and 44ADA would not apply. There is an amendment to the ITR even in the current year to bring the future and options as a separate item in the return. I just wanted to point this out as a corollary. There is also an ITR for Sugam has been amended. You are supposed to disclose the you are supposed to disclose what is the investments, but this is not compulsory. Only thing which is compulsory is the bank balance. If you look at the last line which I have underlined, so investment is not compulsory to be disclosed, but they are asking you to disclose, and we being very creative, we'll do what we like in this particular disclosure which we can do. But I would request you to a word of caution. Trust me, they have such huge resources and data that if they want to point out which pizza you had yesterday from, they can actually point that out, because everything is online. Okay, so whatever we were doing, till they don't want to catch you, it is okay. But the day they want to trace you and catch you, it will not be difficult. So going ahead, I have a lot of this thing. So in others also, only the bank balance is compulsory, investments are not. Remuneration and interest to partners. Now this is a sticky point where TDS has been implemented last year under 194T. And there is this problem where if you don't deduct the TDS, you will not get deduction under 40A IA. So can I say that since it is disallowed in the firm's hand, I will not show it in my hands as a partner? The answer is no. So supposing 1,000 is paid as interest, TDS is not deducted, 30% gets disallowed, 300 gets disallowed, the firm pays tax on it. Can I, as the partner of that firm, disclose only 700? The answer is no. You have to disclose full 1,000 rupees, irrespective of the fact that the firm's disallowance or not. I have put in certain case laws. This is a settled law. Lot of case laws. Munjal Sales Corporation is a Supreme Court judgment under 298 ITR 298, where interest was paid to partners. There was some funds which were being misused for non-business purposes, and there was disallowance under 3613. The question arose that whether the partner needs to show the full interest or he can show only the net interest after disallowance. The Supreme Court has said you need to show the full interest and pay tax on it. As and when the TDS is deducted by the firm can claim it. So I needed to bring this out to you because with the TDS portion of 19040, this life is going to be difficult. Yeah. So there is a change. This is routine. I'm just bringing it out. This is nothing to do with the change. There is a change in law from 25-26. 3 lakhs has made partners remuneration has made 6 lakh rupees. A word of caution. There are 3 conditions. There should be a partnership deed giving you remuneration. It should be working partner, and this should be from the date when the partnership deed has been done. There is there is one more controversy. So supposing I have interest in the partnership firm, or I have rental income from the partnership firm, these slides will be circulated. I see some people taking photographs. These slides are available on the website. You can download it. It is going to be circulated freely. There's no issues. So there is this judgment of Gujarat High Court which says that what is book profit. They say that the book profit is what is there in the profit and loss account, and you need not go to the heads of income to arrive at the book profit. And therefore I pointed this out because there are a lot of times now we come across where you have interest and rental incomes in the partnership firm. Based on that you have given the salary, and when you actually do the computation, the salary comes to something lower because that goes to income from house property or income from other sources. So do I allow that salary or I don't allow the salary? It is allowable. There is a direct Gujarat High Court judgment. There are others also. I was able to lay my hands only on one judgment of this nature as of now. I'll just quickly go through. Everyone is aware industrial promotion subsidy was made taxable from 15-16. Earlier the law was that this was capital receipt, not taxable. You had PG chemicals, you had Ponji sugar mills and all those judgments. However, from 2015-16 law was amended, this has become taxable. Now at that point of time when this was exempt, the department used to argue that if it is not taxable, it is for assets and reduce it from the capital value of the assets. Okay. Now, in PG Chemicals, this was rejected, and they say it is capital receipt, not for a specific asset. In 1998, the act was amended, and explanation 10 was added to 43(1), which explanation said that if it is related to a capital asset sponsorship, then you need to deduct it, and if you don't know what is the proportion of the asset, do it on a pro rata basis. Now, they have amended that in the 2025 Act. So that was a precursor. The language is given over here, the red portion. Cost as is relatable to such subsidy. The language is now changed to subsidy, if any, relatable to acquisition of the asset. Now, what used to happen is, initially when the item was exempt, department used to argue that no, it is relatable to the asset, remove it from the asset. So you had these judgment of Kinfra Export Promotion Industries 137 taxman.com, where the department argued vehemently that this should be removed from the cost of the asset. The logic was, even if it is capital receipt, it is for meeting these costs, and you reduce it from that particular cost. However, now they've changed the language. Now they do not want you to reduce it from the asset. What they did was, they have silently done this, subsidy, if any, relatable to the acquisition of the asset. If it is relatable to, earlier it was cost as is relatable to the subsidy, they have related. Now they do not want to, you want to remove it from the asset, they want to tax you on the capital receipt, because 224 has been amended. So there's a slight change in language, and which will lead to higher this thing. The litigation is not over. Now, this due date of credit to employees, a painful point for all of us. Employees' contribution first, Bombay High Court in favor. For years we continued saying that even if paid up to the due date of filing return, it is allowable. After that, there was this superb judgment of checkmate which said no. Who told you it is allowable? It is disallowable. So, or in 2022, they say that the entire thing is disallowable. Now, this was a pain point, because if you look at the PF and ESIC laws, they have become online. So if you give consultations to bigger organizations, when you take in new employees, the problem is Aadhaar has to be linked. Some technical glitch is there, and the employees' details are not uploaded. And therefore, the payment gets delayed by 5-10 days before 15th. Now, if you don't pay it till 15th, there's a disallowance, complete disallowance, you pay tax on it. Now, this was brought to the government's notice over the years. They've not done anything about it. In 2025, they've fortunately amended the law. Today, they say that if you have paid before the due date of filing return, we will not disallow it. So, therefore, the old position comes back, where if you pay the employee's contribution before the due date of filing return, it will be allowed as deduction. So therefore, the structure is in such a manner, whatever you collect from employees is your income under 224. If you do not pay it within the due date of PF Act or ESIC Act, you will not get a deduction under 3615A. And now they have amended that 43B. They say that even that is covered, and if you paid before the due date, it will be allowed as deduction. Is this retrospective? According to me, no, because it is done in 2025 Act. It can be argued that it is only clarificatory, it should be allowed. However, you know, the amount is not worth the fight up to Supreme Court. Okay. Now, sovereign gold bonds. Now, this is also something where there are a lot of issues. Sovereign gold bonds was something where 2015 the government came out with sovereign gold bonds. Don't keep gold at home. Please buy sovereign gold bonds. You will get 2.7% interest. Though it is taxable, it is something which is available to you. You need not keep it in your lockers. Please buy sovereign gold bonds. There's no capital gain. There was 7C was introduced. No capital gain on sovereign gold bonds. However, if you look at 47C, 7C, it talks about sovereign gold bond scheme under 2015. After that, there were many sovereign gold bonds. People were claiming it exempt. However, the law was not clear whether it is exempt or not. They now have amended the law. They have said that only people who have subscribed to those bonds originally and continue to hold it till maturity will get benefit of capital gain exemptions. if you sell it in between, you buy it from the market and sell it, or buy it from the market and hold it till maturity, you will not get capital gain exemptions. They further clarify that all schemes are covered. Only it is not just the sovereign gold bonds 2015 scheme. All other schemes which have been brought after that also will get exemption under the capital gain under 47(7)(c) if you are original subscriber and you hold it till maturity. Now this creates a few issues. Supposing someone has expired and you inherit that particular sovereign gold bonds, okay, what happens? Does it become taxable or does not become taxable? Or supposing you have received a gift from your ailing mother or your father because they don't have a demat account or some other issue, and therefore it is received as a gift. Does it make it exempt? As of now, it is taxable because you're not original subscriber. Representations have been made to the government, at least some clarification or concession should be given so as to these sort of issues are taken care of. Definition of relative under the new law has been amended. The portion written in the red, relative means lineal ascendant descendant of the individual was the original version. Now they say relative means in case of individuals, any lineal ascendant, maternal or well as paternal or descendant. So they are saying both maternal and paternal, both descendants would be covered. Now this is only clarificatory according to me. I have quoted 3 judgments where there was a dispute and the matter traveled up to Supreme Court, and they said that if it is in the straight line from the maternal side or the paternal side, if it is in the straight line, then it is linear ascendant or descendant and it is allowed as a relative. So therefore this is just a clarificatory because these judgments were there and there were litigation. Now they've clarified whether it is maternal or paternal. The entire relative will include both maternal and paternal, linear ascendant and descendant. Going ahead, 73. Now 73 talks about setup of capital gains. The language was where the result of any computation made for any assessment year under section 48 to 45 in respect of capital asset other than short-term capital asset is a loss. So you have long-term capital asset and long-term capital gain. You can set that off. Shall be entitled to set off against income of income as arrived under. So the language was that it should be under a similar computation. Okay, similar computation. I could have slum sale under 50B where the computation is different, and I have without indexation capital gain from shares. Can I set off both those long term? According to me, yes. There was litigation with regard to this. Certain case laws are listed on the on the slide which will be circulated. In those case laws, it is said that this is allowed. You cannot have similar computation, you cannot use it to pinpoint and disallow such deductions, and therefore it was allowed. However, there was litigation. Now they've removed that language. The new law removes that language under similar computation. So therefore they say that such loss shall be set off without the similar computation portion. That is, they've clarified that particular portion. There was another issue. So supposing I have long-term capital loss and long-term capital losses is a 10% item. So I have long-term capital gain, which is 10% item. I have business loss. Can I choose not to set off business loss against long-term capital gain, carry forward the business loss and pay 10% because my business loss is at 30%? The answer is no. There are case laws, and there is this direct case laws of CIT versus British Insulated Calendars 202 ITR Bombay High Court, which was later on confirmed by Supreme Court, where they have said that you cannot do this cherry picking. So if you have long-term capital gain, which is taxable at 10%, you have business loss, you have to set it off. The law provides for it compulsorily. You cannot carry forward the business loss and say, I'll pay 10% and I'll set off the business loss next year against the 30% profits. So this is something, even the changed language does not allow this particular issue. Next is 50% shareholding. So you had section 79. Now if you look at section 79, that section 79 used to talk about that if you the shareholding or the beneficial ownership changes more than 51%, then the losses will not be allowed to be set off. So there was the law under 79. If those holding 50% voting rights or 50% of profit sharing ratio, they will not be allowed to set off that loss if there is a change in shareholding. Now the problem is they've changed the language in the new law. What is the change in language? Instead of persons under 79, in the new law 119, they say person, single person. Okay. Similarly, earlier it says last day of the previous year, your whatever was shareholding on the last day of the previous year. Now they say last day of the previous year or years. What is the problem can be explained with the example which I given on the end. So you have situation 1 where you have Mr. A holding 51%, Mr. B holding 49%. Due to certain disputes in the family, there is a change. Mr. A is holding 49%, Mr. B is holding 51%. If you take persons as such, the same persons are holding more than 51%. But if you take person as a singular, the problem arises to say that this is disallowable. This is the change in language will hit you if person does not include persons. Okay. So therefore, this was even brought to the notice of Parliamentary Standing Committee. However, they have not, they said that this is an error, we'll rectify it, but no change was brought in, and this is the law today. The second thing is, second issue is, if you look at this year 1, 51% and 49%, just look at the ratio. In the year 2, it is 49%, 51%. D is, Mr. C is introduced. And in the year of profit, again, Mr. A and B is 51% and 49%. Now, if in the year of loss, it was 51% A, and again in the profit year, it is 51% is profit year is 50%. In between, there is a change in ratio. Will it lead to disallowance? According to me, it should not be, because ultimately in the year of profit, my ratio has gone back to what it was. However, the language is very funnily worded. As I said, that the change is years or years. So every year you should have the same ratio. That is the understanding of the new law. Now this was brought to the Parliament Standing Committee's notice that this is never the intention of the law. That the department came back and said, yes, this is an error on our side, we will rectify it. However, no rectification was done. The law is passed today and we are made to fight this. Will Parliamentary Standing Committee replies form part of any justifiable for doing this? The answer is no. Parliamentary Standing Committee is over once the law gets passed. So this is the issue which we were going to face in due course. Buyback of shares. I think this seesaw has been going on. First it was taxable in the company's hand. Sorry. And then they amended the law. Sorry. They amended the law. In Finance Act 1st October 24. After amending the law, they treated it as a dividend, and the carry forward loss would be allowed, short-term capital loss. They then now again amended the law. After amending the law, what they did was they said that, this was an error, it should be 12.5% only. However, what happened was they again said that 12.4% capital only if you are not a promoter. If you are a promoter, what is a promoter? Anyone who holds more than 10%. So anyone who holds more than 10% share is a promoter. In case you are a promoter, you pay higher taxation. If you are a non-corporate assessee, 30%. If you are a corporate assessee, 22%. 12.5% capital gain, balance is the additional tax which you pay. The table is given over there. This is something which has been, you must have already know. I just put it for this thing. Certain administrative changes have been made in the new act. So the due date of filing return has only for persons who don't have audit and who have got business income. They say that we will give you 1 month more because business requires a lot of effort. 31st August is the due date. extension of due date for revised return. So earlier, if you remember, you were supposed to file the revised return by within 9 months of the end of the assessment year. A lot of representations had gone saying that 9 months is just not enough. We don't even know before that the time limit gets over, and therefore there is a need for extension. They said, yes, we will give you an extension. However, you will have to pay extra money. They amended the law. They brought in this new section 234I. They say that if your income is more than 5 lakh rupees, pay 1,000 rupees for the revised return. If it is more than less than 5 lakh rupees, 1,000. More than 5 lakh rupees, 5,000. So we will allow you revised return from 9 months to 12 months, but you pay this extra for the 3 months which you have got. Okay. Similar amendments are done under the new law also, 263(5) and 428B. Next is updated return. So they've really, there was this, if you have missed out on something, they allowed you to do updated return provided you pay extra. Okay. That initial 25% for 1 year, 50% for 2 years, 60% for 3rd year, 70% for the 4th year. You pay extra, I will allow you the return. Now the problem was, supposing I have a loss and I want to reduce the loss. They were not allowing me to do it. Okay. This was the problem with updated return. If I have a loss, I want to reduce the loss. And therefore there is something which I am correcting. However, this was not allowed. A lot of representations were made. They are now saying that that is now allowed. So they have amended the 139(8)(a), added proviso to say that even if you have a loss and you reduce the loss, that will be allowed, though you are not paying any taxes. They further amended the law. They further amended the law. Just a second. They further amended the law. They say that, so there was this problem that they said that if you have received a 148, if you have a search case, you are not allowed to update the return. They are saying nothing doing. We will now allow you to file an updated return even after 148 notice, provided you pay 10% extra on the tax interest which is there. We will allow you that additional this thing. And they give you an advantage that additional income which you do by an updated return, no penalty under 270A will be levied on that. And that will be removed. The additional 10% will have to be paid. That is the amendment which they've brought. Similar amendment is there in the new law also, section 267 and 263(6)(a). Now this is the problem, because under the 2025 Act, the government says that we will pass the penalty and the assessment order jointly. Okay. So the assessing officer, while passing the order itself, will pass a penalty order at 270A. Now this creates a huge problem, because imagine an assessing officer who is making an addition. Will he ever not levy a penalty under this thing? And will he levy under underreporting or misreporting? Your guess is as good as mine. It will be misreporting. So for all cases, it is going to be misreporting 200%. Even today also, for all cases, he finds it misreporting only. Though it is part of the asset and that is underreporting, he will give you a notice under misreporting. If that is not enough, what will happen is, there is no effective time to give you a show cause notice. Currently, the assessment itself is done at the last moment. Imagine doing penalty. After that, you have to issue a show cause notice. That show cause notice has to be replied, and then a penalty has to be paid. So the time itself is too short for you. You are going to be stressed out. At the last moment, they'll issue a show cause notice, give a non-effective hearing, and that penalty will be levied. This is the thing which is going to happen. Besides that, there is 263, 264, 154, 246. All these sections allow rectification appeals for penalties. Now those sections have not been amended under the new law. So I don't know how they are going to improve. They still allow you a separate penalty appeal. So is it that if they miss out on doing a joint appeal, they are going to levy penalty separately also? This is something which is not clarified as of now. Second thing is that you have listed companies, you have companies which are NBFCs or companies which have to do borrowing. All these companies will have to disclose those huge amounts in their balance sheet, and their power to borrow money is going to get affected by these issues. So therefore, this is also going to hit the financial health of those listed companies, because their capacity to borrow, their capacity to come out with public issues is going to be badly affected. Again, as a corollary to this, the finance minister gave you a relief. They say that we will not collect the penalty till the first appeal order is received. They also further clarified that the only 10% of the tax will be collected, neither the interest nor the penalty will be collected. However, they have not amended 1914 circular of 1993, which required you to pay 20%. So as of now, this is just a promise which the finance minister has given, saying that 10% of tax only has to be paid. However, as of now, your first appeal takes 3 to 4 years. We all are aware. Okay. So if for 3 to 4 years your borrowing power is going to get affected, you'll have to disclose to the, if you're a listed company, you'll have to disclose to the board that this has happened, and all those going to be happening. Besides that, if you want to sell a property, you will not get a tax clearance certificate. Today, any property is to be sold, the opposite party tells you, get me a 281 certificate, that tax department has no objection. You, again, in these cases, they'll say you show me you have enough assets to pay my liability. Otherwise, I'll not give you. So that is going to affect even your 281 clearance will get stuck. Yes, I've covered everything. Yeah. Waiver of penalty and immunity from prosecution. So you have 270AA. Now 270AA says that if you are issued a notice, if you within 30 days of that notice, you pay the interest and the tax, and you apply in 270AA, you will get an immunity from penalty and prosecution. This is the law. The problem with this law was that it did not allow misreporting as option to go for immunity. They have now amended the law, and they have said that even misreporting will get covered provided you pay 100% penalty. Okay, so nothing comes free of cost. There are no free lunches, at least not in Income Tax Act. So you pay that additional amount if you are held under misreporting. If you pay the 100%, you will get an immunity from penalty and prosecution of 200%. Okay, so this is a welcome step, because there were a lot of issues with smaller taxpayers who did not really want to go for litigation. Yeah. Now, amendment to section 108, section 68 to 69D of the erstwhile act. There was a concept of the assessing officer may include the credit if it is not satisfied. Now, they said that we will replace the may with shall. May itself was creating such a big problem. Can you imagine what will happen after shall? And to add to it, you have the proviso which says that you need to prove the source of source. Now, the law says source of source is not to be proved. It only says this, the language is quite different. One sec. So it says that you need to, sorry, the nature and source of the source you have to prove. You don't have to prove the source of source. So I need to only prove the nature and what is the source of that particular source. I do not have to prove his credit worthiness. If you have gone faceless assessments, you know, they go to the third layer and fourth layer and ask you that it is not proved. So I have a case where I have taken loan from him. He has taken his money from his sister-in-law. His sister-in-law has got a gift from his father. Now I have proved the bank statements and the return of all the four. And then he goes to the father's bank statement and says that you have received 1 crore from someone, you have not explained it, therefore I'm adding it in your hands. Now this is the fourth layer. So this is likely to happen in all 68 matters, because according to the department, the source of source is to the hilt. So fourth layer, fifth layer, till I get satisfied, I can go beyond that. Okay, that is the understanding. So you are going to face a lot of these litigation, which were in May. Now in shall, it is going to go at more worst, because he say that I don't have power to not make an addition. I have to make an addition because I am not satisfied. Next. Yeah. So reduction in the rate from 60% to 30%. Don't go by the figures. So earlier during demonetization, 115BBE was brought in. And they said that tax rate is 60%, surcharge is 25%, so 60 plus 25, 77%, and then there is a penalty of 10%. So therefore, it was going to some 87 or 80%. They now realize that demonetization is over. You need to shift towards a lesser taxation. However, what they've done is lead to higher taxation than what was already taxed. So you have 30% and then you have 200% penalty under 270 AA, which they've amended to include it over there. And therefore, you will have to pay. So this is the chart. So if you go for immunity, still you pay 85%, whereas you were paying 84% in the original this thing. So effectively, there is no concession which you have received. You are going to land up paying that particular amount and plus more. So they've not really given you any advantage to this. The reduction of time limit for filing of TDS, I think yesterday Sony was here and he's very good at it, so I'll not spend time on this. You all are aware that this is a difficult time. Even if you have paid the taxes, the challan does not get seen and the old correction cannot happen. Sony must have dealt with it. I'll not spend time on this. Yeah. So Black Money Act or BMI Act, this is the act where you were required to disclose your foreign assets. 2015, the Black Money Act was brought into picture. You were asked to disclose all your foreign assets and liabilities. Initially, for 6 months, there was an amnesty scheme where you had to pay some 50 or 60% and you could get out of it. Very few people actually did that. And today, the situation is that you get huge notices for Black Money Act, and the government realized that someone has forgotten the time he was a student, he was holding an account, someone had gone abroad and opened some account and inheritance, and all those issues are there where there is no intention to actually evade taxation. Okay. So first thing what they did was last year was to rationalize it. So the criteria was that if you don't disclose it in your return of income in the schedule of foreign assets, there is a penalty of 10 lakhs for non-disclosure, even if the non-disclosure is of 5 rupees. Okay. So there's a penalty of 10 lakh rupees. They initially brought in a limit of 5 lakh rupees. So up to 5 lakh rupees, non-disclosure, we will not levy the penalty. After that, there was a hue and cry and they amended it to bring that limit to 20 lakh rupees. However, that 20 lakh rupees is only for movable assets. If you have an immovable property, that 20 lakh limit is not applicable to you. So therefore, that 20 lakh rupees, if your non-disclosure is of 20 lakh rupees, you are out of it, disclose it from the current year and you can continue doing it. But if it is even few rupees more than 20 lakh rupees, you were in a problem, there is a penalty of 10 lakh rupees which could be levied, and there are tribunal judgments which said that irrespective of what is your intention, the source is known, penalty is leviable for non-disclosure. So therefore, they have now rationalized it to 20 lakh rupees, and they've also come out with a scheme to say that you give a one-time settlement sort of a scheme. They've bifurcated that particular scheme in 2 parts. Actually, the scheme is not in action as of now also. They've not actually come out with a notification to how to file this for the scheme, nor come out with the rules. However, currently the scheme as the finance minister is given under the finance bill and the act is that if supposing you have undisclosed foreign assets and the source is not known, up to 1 crore rupees, we are ready to give you a one-time settlement thing, pay 30% tax, pay 30% penalty, 30% penalty, and you are out with it. You fill up the form. We will not go into what is the non-disclosure, into penalty and prosecution. There were other cases where the source is known. I have done it from my known sources. However, I have forgotten to disclose it in my return. There they say it is the asset size is up to 5 crores, less than 5 crores. In that case, we will only collect 1 lakh rupees as fees and regularize it. Now the question is, there is no clarification as to whether that particular 1 lakh rupees, so I have got an asset in 2021. I have not disclosed it 25. It is 30 lakh rupees. Do I need to pay 1 lakh rupee per year, 5 lakh rupees? Or do I need to pay 1 lakh rupee and close it? That we will be able to know only when the scheme comes out how they come out with it. The second issue is with regard to the first, where I have undisclosed income. So I have not, from my disclosed sources, I don't know. In that case, there is also a violation of FEMA. So whether this disclosure would give me an immunity also in FEMA is something which when the scheme comes out, we will come to know whether how it will go about it. There was this huge UN cry for declaration to be filed under 156 and 157. 156 for those who have PAN, 157 for those who don't have PAN. Some influencer had come out on this thing and said that you need to fill up this online, and others, unless you fill it up, you will be stopped at the airport. The government then came out and clarified that there is no need, there was no intention to do this. However, the law as it stands, this was 230 of the erstwhile and 420 of the current law, which allows them to stop you if your demand is outstanding. However, in that particular old 230 section, they had come out with a internal circular where they had said that up to 10 lakh rupees outstanding demand, there is no need to do anything about it. However, in the current, that 10 lakh limit continues even today. So if you have a demand of more than 10 lakh rupees through a 143(1), TDS credit not given, do I need to take a tax clearance? The answer is no. The intention is not that. The videos which were shown that 2 people are being stopped, those 2 people, if you look at the details, there was a lookout notice. They had customs outstanding, income tax outstanding, and they were already on the hit list by a lookout notice. It's not that the government wants to tax anyone who is doing. But can they stop you? The answer is yes. If your demand is more than 10 lakh rupees, they've identified you and lookout notice is there, they can stop you at the airport. However, this is not likely to happen. And if the government wants to really stop you from going abroad, why look at the Income Tax Act? There are so many laws to look at, you know. So there is no need to panic or anything with regard to this. And if you want to comply, there is a simple form. It will take 10 minutes to comply with that form and file it online. It's nothing rocket science. Receipts of arrears. So what happens is that some of the salaried employees of your clients have arrears which they received either from gratuity or from leave encashment at the time of retirement or when they leave the job. Now, can I claim a deduction under 89(1)? The answer is yes, you could claim it, and there was a form 10E you used to form. Now, after 1st April, that form number is 39. That form is a very simplified form, and it gives you the basic details. I wanted to point out that this form is to be filled for all arrears of salary after 1st April. So, arrears of salary are taxable in the year of receipt. So if you receive anything after 1st April, you will have to fill up form 39 and not the old form 10E. That is the reason I wanted to bring this out. Form 39 is far simpler than the form 10E which was there. I've gone through it. I think we have a slide on that also. And the calculation is simple. Another thing which I pointed out is that this can also be used for gratuity, leave encashment, and superannuation fund. So if you have a smaller employee who's received gratuity and that is taxed because of gratuity, that also you can take benefit under this form. A lot of people don't take it. That's why I wanted to bring this particular form into picture. So if it is before 31st March, it was 10E. After 31st March, it is form 39. Perquisites valuation of salary. We will quickly go through this, not much relevant. I have 10 more minutes. So there is a change in perquisite value. Now I have this is a very common thing. There's an increase in the valuation of motor car valuation and driver and all that, which you all are aware. It was circulated throughout in the newspapers. Only thing which I wanted to bring out is this is allowed only if you are in the old system. Under the new system, these deductions are not allowed. So you cannot claim these deductions if you are in the old system. I get a loan of 2 lakh rupees. Is the nominal interest exempt? The answer is no, because I'm in the new system. If I'm in the old system, all these deductions can be claimed. That is something which I wanted to bring to your notice. There is an increase in those deductions. The comparative chart will be given to you. 200 rupees for meal instead of 50 rupees. Gifts up to 15,000 instead of 5,000. all those things have been changed. You can have a look at it at leisure. Nothing great about it. Form 16 again has been amended. You had two parts. One part we used to give you the salary part. The second part used to give you the TDS deducted. They've added a third part. If you remember, there is one section 194P in the old act, which says that if you are a person who's more than 75 years old and you have account into one bank and no other bank, and FD interest and pension is only received, bank will deduct your tax. You need not file the return. No one, I think, none of the senior citizens ever must have claimed this. However, that section has now been amended and brought into Form 16, that if they deduct it and you don't have to file a return, that is converted into Form 130. They've amended the 12BB form, and for house rent allowance, they've made it more strict. Whom are you paying to, whether there is an agreement, whether there is a receipt, all that has to be disclosed. What is the relationship with the landlord also has to be disclosed. There is a requirement to give PAN. Certain limits have been reduced. I will not get into those details. Rule 159 has been amended. One can go through this list. I will not spend time on this. This is something which I'll spend 2 minutes on. Change of PAN card application. They've bifurcated the PAN card application into 4 parts. Individuals who are citizen, individuals who are non-citizens. Non-individuals who are companies registered in India, companies which are registered outside India. So they've made 4 forms. Life is very simple. The 4 forms makes it very easy to apply for. One more thing is they've made compulsory mother's name for foreign citizens, whether you are a person of Indian origin with or you are an OCI card holder, or you are a complete foreign national, has to be disclosed. Your date of birth and proof of that date of birth has to be given. There are simplified fields. The salutations are out, and the form is now an intelligent form. So if it is not matching with your Aadhaar card, it will reject it at the initial stage itself. It will not allow you to go ahead. The problem which you used to have, that PAN and Aadhaar is not matching, is thing of the past. As soon as you now fill it up, if it is your name is not matching with the Aadhaar, the system will not allow you to go ahead, because they'll say you need to change. It will be only as per Aadhaar. So the correlation will be done at this stage of the form itself. To that extent, it's a great help. The bifurcation of the forms also helps you to understand what are the requirements. One more thing is that they've allowed authorized representatives to apply for it. So foreign companies, instead of just the directors, authorized representatives who have the power can also apply for the form. So making life easier for people who want to apply through authorized representative. Before I move ahead, this is important. If you are filing STF forms, if you don't have the PAN number of the foreign shareholder, the system is today levying 50,000 penalty, saying that is defective. You reply to it and they say PAN is not required, still they'll levy a penalty of 50,000. So therefore, simplification of forms is really going to help you in getting the PAN of foreign shareholders. So all foreign shareholders who are foreign nationals who have shares in India are required to have a PAN, is the understanding of the department. If you don't do it, they levy a penalty through the STF modes. For even PAN correction, they came out with CR01 and CR02, where they have bifurcated those forms into individuals and non-individuals. So that is a very simple form and very structured one. Going to it, yeah. So if you look, that is the reason they bifurcated the form. In the NRI form, there will be no Aadhaar requirement. The whole issue is the bifurcation of form makes life very simple. The details which are required are specifically for this thing. Okay. Yeah. So international taxation, I think my previous speaker had done it. So I am not going to. Only thing I wanted to bring out with, he is not dealt with 41, form number 41. Now this form number 41 is the 10F of the old this thing. So you are required, if you want to give benefit of double taxation agreement with any country to a person, you need to file form 10F. If you do not file Form 10F, you cannot give as a chartered accountant under 15CB benefit of the double taxation agreement is the law today. Now this Form 41 does not allow you to go ahead unless you attach the TRC. Okay, this Form 41 does not allow you to go ahead unless you have a TRC from that country of residence. Now this creates a problem. There are certain countries which do not have the concept of TRC. There are certain companies like UAE which give you a TRC only after July. Okay. Now how do you go about making payments for April to June if you want to have to make those payments? How will you fill it up? So do you take an undertaking from that particular person saying that I will give you the TRC later on, because the form requires you to give a TRC, and supposing there is a TRC of 2025, do I give him the Form 41, file the Form 41 and do it? The answer is that you will have to take a call. Today the government is saying, no, we want a TRC. Unless TRC is available, DTA benefits cannot be granted. So if you want to make a payment to UAE from January to this thing, you don't have a July, you don't have a TRC. It's a call which you have to take. Earlier what used to happen was, we used to file Form 10F and then revise that Form 10F and attach the TRC at a second date, saying that now I have complied. However, 41 is to be filed once in a year. You cannot revise it, you cannot amend it, making the life difficult for you, because you will not have a TRC. Or some people, for practical purpose, what they are doing is, they are taking the 2025 TRC, attaching it and filing the Form 10F. Now, is that okay? Is a call each chartered accountant has to take depending on what trust factor he has on that particular client. However, this is something which you need to be aware of, because the forms will be filed online, TRC is not attached, and suddenly you will get a notice saying that how did you issue the particular DTA benefits were given. So this is a question answer which they've answered in that booklet, where they've said that for getting double taxation agreement benefit, Form 41 is a must. So there is no time limit for Form 41, and you can file it only once in a lifetime. For all the forms, you need to give the email address and the contact number. In all forms today, they've included, then the new system, everywhere there's an email address and phone number. So if the foreign party does not want to give his phone number, he has to keep a chartered accountant to give a phone number. If I was a chartered accountant, I would not give my phone number. There's a Delhi High Court matter going on as of now, because there was someone who gave the name and address, and based on that, the department is saying that they have a PE in India, and therefore you pay tax as an agent of that. So this is something which you need to be very careful before you give numbers, phone number and email address for non-residents. Please do not do that. You are a professional. Tell him you give your employee's PAN number, you give your employee's phone number. Don't get me involved. Yeah, PAN is optional. You can give any number. You could have your DIN number or the passport number, whatever. PAN is optional. Yeah. The clause 13, upload copy of the annexure, TRC. That is something which I wanted to bring out. PAN number is optional. You can still file it. Yeah. Filing is mandatory. I've covered, I think. The concept of other documents. So how do you decide TRC as per global? Tiger Global, TRC is not the only document for deciding the residence. So do I become a James Hadley Chase and find out what is his website, where does he locate? How can I do that? So according to me, the chartered accountants can still follow the TRC and say that based on TRC, I'm giving benefit of double taxation agreement. Yeah, yeah. There is this is 159(7), a unique amendment to the law. I think, have they covered it? Has he covered it in the last lecture? Not, okay. So 159(7) is tells you, so supposing you have a term which is not defined in the double taxation agreement. So they say you go to the Income Tax Act first. So after you go to the income tax, that term is not defined in income tax also. Then they say that you go to the circular. Has the government come out with specific circular to define that term? No, there is no circular. Then what do? They now amend the law and they say that now you go to any taxing statute in India. There are 850 taxing statutes. Okay. So you go to any of those 850, if the term is defined over there, you use that. Supposing it is not there also, then any commercial law in India, there are 2000 commercial laws in India. So as a chartered accountant, how will I go to the definitions? Now, a simple difficulty level, I'll tell you, is the place of business. Place of business is not defined in the double taxation agreement. Place of business is not defined in the Income Tax Act. Place of business is not given definition by notification. However, you have the GST law. Okay, the GST law defines place of business as under 285, 2 subclause 85, as any place where books of accounts are maintained. Now, if that becomes place of business for all these GCCs which are operating books of accounts, are you trying to tell me that they have a P in India? So if you take up definition out of context from any act, this is likely to happen. And there was a strong representation made to the parliamentary committee saying that this should not happen. Committee put it up to the department saying that why are you changing the principles of this thing? Department came back to the parliamentary committee to say that this is to make it simple and clarify. Now, I don't see the simplicity. It is going to create more problems than solve. Yeah. TDS provisions, I think you've already done. So I don't need to, you've done extensively with, yes, so I don't need to get into TDS. 15 G and H also you've done? Yes, with him, yeah. So, yeah, so even consolidated 26 QB and all also you must have done. Yeah, thank you very much for a patient hearing. This is all I wanted to say.
Good afternoon all. Thank you so much Ashok sir for your insightful session. On behalf of WIRC, I would like to give you a formal vote of thanks for the session. Genuinely it was an insightful session. You wrapped it up, you summarized it well, even though it was an extensive session, and I guess the topics which were covered are something which is very daily in our life as a practitioner. Thank you sir for your time. Thank you for the session. Thank you all.
Members can now proceed towards the lunch, and we will start the session at 2:15 sharp.